Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 13th of August 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at the overnight changes and price moves to be aware of. It's a Monday, of course, so we'll look at things from a weekly perspective as we always do, and what a week it's been. It started slowly, it gathered momentum even, and it finished with a proper bang. We have seen the dollar push back against majors such as the euro, the British pound, and against the Australasian currencies, the Aussie dollar and the New Zealand dollar, both giving back significant ground to the US currency. The Mexican peso, another casualty, down by around 3.67% on the week against the US currency. The dollar, for its part, I think we'd have to say was dominant. Dollar index trading at 96.45, up by 1.15% over the last week. That is a significant move in the dollar in anyone's terms. And the sort of flagship for the emerging markets, the South African rand, having a very, very tough time, down by 9.17% against the US currency last week. And we'll come to some of the reasons for that a little bit later on in the video. Okay, so what's on the calendar today? Events that may move the markets. Not a great deal is the honest truth. It's a very thin calendar. We ease ourselves into the week with just one piece of European data. That's consumer price index data out of Italy for the month of July. And then we have to wait and jump over the Atlantic for a 3 and 6 month bill auction out of the US at 15:30. The last couple of T-bill auctions have seen low bid to cover ratios, so they weren't particularly well oversubscribed, if I can put it like that. It will be interesting to see how the market responds to the offer of US paper today in the midst of the August lull. I use the word lull advisedly, of course. Right then, breaking news and comment that's caught my eye overnight and over the weekend. And first of all, Asian stocks have weakened in early trade and the yen has risen as the fallout from the collapse of the Turkish lira last week hits home. The Turkish lira has moved lower once more after last week's 20% fall versus the US dollar as markets look for affirmative action from Turkey's government and the central bank. The concern now is of a complete collapse in Turkey, of a run on banks or a failure of businesses, and of so-called contagion, the spread of concerns from one country to another. We saw at the end of last week how Spanish banks, for instance, are among the biggest creditors to Turkey, and obviously what global financial authorities won't want to see is domestic issues in Turkey spreading to other economies. Moving away from Turkey, last week's commitment of traders report showed an increase in the number of dollar bulls, a reduction in the number of WTI or West Texas Intermediate crude longs, and falling bearish bets on the US 500 index. Traders were also less bullish of gold, and I wonder if that will change this week if we see the Turkish crisis rub along unresolved. Okay then, food for thought, something to take away with you into the trading day and beyond, and why not think about this? New research from Goldman Sachs suggests that the US will become energy self-sufficient in 2019 and will be petroleum self-sufficient in 2021. US energy imports have fallen steadily since 2008 and are now at their lowest level since 1970, Goldman says. The charts here are just, visualizations of those points and a projection here about what might be happening out to 2021. Of course, the key thing here is, does that energy self-sufficiency imply a change in US foreign policy, or will it make Donald Trump or whoever else is president more insular still and less inclined to become directly involved in global political issues? We'll have to see, I suppose, what happens, but it's worth thinking about what that means and what it might mean for the global economy as well. Okay, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account manager. Thank you very much for your time.